How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. If you're new here, please consider subscribing. We make daily videos on stocks and options on the hottest stocks in the market. And today we got a pretty good video. It's going to be going over AMC stock and how to double your money playing options on this stock. So as we can see, AMC had a great day in the market yesterday, up 15%. So it's sitting at a price point of just under $50. So it's pretty, I'd say it's at a pretty low price point. It's still down in the past week, but and it's been consolidating a little between this $40, $50 mark. But I think there's still more room to grow as long as the retail investors have their focus on the stock. They don't get diverted into all these other stocks, because if everyone's trying to get into all those other stocks and spreading out their money, AMC will definitely have a struggle going skyrocketing in price. But I think that once people come to their senses, they'll come back to AMC, and this stock will once again rise, and we will experience the much anticipated short squeeze. So we're going to be going over our option strategy that you guys could use, especially those with smaller accounts. I've been making videos on cash secure puts, which is my favorite and personally my favorite strategy. My favorite option strategy for consistent income, but it does require a little bit more capital than most people have. So this one is going to be great for people with smaller accounts. So let's head over to the options chain. I like to do options, not really expiring next week, but I like to do maybe 2, 3, 4 weeks out to give ourselves some time. So something like a June 25 option expiration date would be pretty good. Especially using this strategy on a small account. So we're going to be doing the put credit spread option strategy, which is a 2 option order strategy. We're going to be selling a put and then buying the put right under it to open a credit spread. So let's do an example. So I normally like to do it a little further out of the money, so I'm going to go down the strike prices. Something like a $40 strike. We're going to be selling that. Click the check mark there, and then click buy, and then buy the one directly under it, the $39 strike. So as we can see here on the right side of the screen, we have our puts credit spread order. We're going to be receiving a total credit of $48 of premium. So just like a cash secured put, we're going to be receiving a credit for this trade, and we want the premium to bleed out over time. This is a theta play, remember. So what we're going to do is, if we'll place in our order, review order. So this strategy requires $100 of collateral minus our credit that we're receiving. So you only need $52 of collateral placed into this trade per contract. So if you have a small account, you could just do one. But if you have a bigger account, say $5,000, you could place an order for 100 contracts, as we can see here, and you will receive a massive credit of almost $5,000. So yeah, this strategy is going to be ideally doubling your money. As we can see, collateral $10,000, credit $4,800. So you only need a collateral of $5,200 because we're receiving premium of $4,800. So this would be pretty good for people with small accounts, and you can put multiple contracts if you wish. So $40 strike and $39 long strike. What we want the price of AMC to do is to stay above $40 by June 25th. And if that happens, our put credit spread expires worthless, and we make our full profit of $4,800, effectively almost doubling our money in just 2 weeks. 50%, 100% return in 2 weeks. So sounds pretty good. But the downside is if AMC goes below our strike prices, then we will lose unfortunately, our collateral of $5,200. And that is going to happen if by June 25, AMC goes below $39. So obviously we don't want that to happen, but with the way AMC has been trading, it's been trading pretty flat. It's been oscillating between the $40, $50 range. As we can see, AMC is sitting at almost $50. So it does need a pretty significant drop in order for us to lose on this trade. And if you want to be even safer, you could scale out the expiration date to maybe another week out in July. And then you can also adjust the strike prices to make it something a little lower if you want a little less risk. But something like this would be pretty good. $40 sell put and a $39 buy put to open our put credit spread right here. And this would effectively be an option strategy that can double our money pretty safely, because if you buy outright shares, outright calls, you're most likely going to lose, and this is going to be a strategy that has a higher probability of winning. So of course, just like cash secured puts, you can always close the spread early by buying it back. So if AMC goes to $100 the next day, our premium for the put credit spread will probably be pretty low, and we can buy it back at a lower price for a profit. So if the premium on the credit spread, if it's bled out a lot, I highly recommend closing out the spreads before it expires, because holding spreads until the last day is pretty risky in case you do get assigned by AMC going in between your strike prices. That would be pretty risky, because the $39 strike calls or strike puts would be exercised, while the $40 ones would be expiring worthless. So there's going to be some assignment issues there. So always close out your spreads before the expiration date, unless you're 100% sure that the spread is going to expire worthless. So that's my advice to you guys. But that's about it for this video. If it helped you any way, if you want to see more option strategies, if you want to see more stocks to do option strategies on, leave a comment down below what you want to see. Of course, if you are new here, please consider subscribing. We make daily videos about the stock market. Thanks for watching.